Horrifying crisis hits silver price in 14 days. Look out below. This is frightening and an urgent caution that the money you've put into silver may not be safe. I'll show you what the global market is set to unleash on the price of silver. I'm going to break this down and show you how fast the next 14 days will change course for the precious metal, and you might want to get out while you have a chance. Listen closely to this. I want you to be prepared. I don't want you to be left behind. This is from Reuters, and it says, global bond markets face the biggest amount of net sovereign issuance so far this year in June, just as economic data throws rate cuts into doubt, testing investors' so far strong appetite for the debt. That is an understatement because we live in a debt-based society. So as all these bonds are being pushed out, it's going to come and bite silver. Watch this. This says net government bond supply is likely to rise to $340 billion for the U.S. I'm going to say that again. Net government bond supply is likely to rise to $340 billion for the U.S. Now, the price of silver has an inverse relationship to these bonds. So we're really going to get a big change to silver. This says Eurozone countries and Britain, according to data from lender BNP Paribas, as redemptions fall and central banks continue to slash their holdings of the paper. We've seen China recently just dumping U.S. treasuries, and that's when we really started to see a big uptick in the price of silver. But this gets switched in the opposite direction. The article continues, although analysts expect markets to absorb the supply, it has the potential to add to upward pressure on yields, which move inversely to prices, and spook investors who were hoping that rate cuts would spur a bond market rally this year. So as this year rolls out, we're halfway through, we're seeing that big moves are being made while the Fed holds steady and everyone, specifically investors, realize that, oh, these rate cuts that we dreamed of in the beginning of 2024, remember back when people were saying it's going to be 4, 5 rate cuts? Remember those days? Those are clearly gone. And now these huge moves are being put in place because everyone has swallowed that reality. Let's keep going. This article says, a pair of weak U.S. Treasury auctions on Tuesday may have been an early sign that the market, already grappling with strong economic data that has caused traders to push back their bets on when central banks will start cutting interest rates, is struggling to remain optimistic. So central banks are issuing these bonds, and that's going to impact treasury yields. This article says, developed market governments are still borrowing large amounts as they help their economies recover from the shocks of the COVID-19 pandemic and the energy crisis sparked by Russia's invasion on Ukraine, elections in the U.S. and Britain. This is an election year, and every election year causes strife on the economy because politicians want to make themselves look good. So on a typical election year, we're going to see that impact the economy, but of all years, 2024, this is a big election with a lot of stress on every side. So this is where we see it play out. This says that central banks, meanwhile, are reducing their bond holdings. Did you hear that? Central banks are reducing their bond holdings in a process known as quantitative tightening. The Federal Reserve has been allowing $95 billion of government and mortgage-backed bonds to mature without replacement each month, according to the Bank of England, which is actively selling debt back to the market. So in this debt-based economy that we live in, all of these moves that take place between investors and bonds and treasury yields, this all impacts the price of silver. And I started off this video at the top of this article mentioning that number that says net government bond supply is likely to rise to $340 billion for the U.S. That is absolutely going to impact the price of this silver that I'm holding in my hand. Oh, if you're enjoying this video, please hit like, please hit subscribe. It really helps to get this information out there. Now, that's absolutely going to impact this price of silver, along with the elephant in the room, which is the housing market that is stuck on with 8% mortgage rates. Now, this is the peak season for buying homes. And as people choose to hold off on buying homes, they're putting it into precious metals. So we have this tug and pull and tug and pull between treasury yields, bonds, and people choosing where to put their money, whether to go into precious metals. Now, as silver remains quite strong at $32, we're hoping and expecting it would continue to rise and continue to push up to $40. But this is going to be a serious problem as this plays out, because it gives investors, and when I say investors, I mean, I also include people who typically would be buying a home right now. They're considered an investor. They're going to take that nest egg that they've been holding on to and waiting to put into a home. They're not going to just let it sit. They're going to put it somewhere. And now, as we see, net government bond supply going up to $340 billion, that's another option for the investor. And when it goes in there, it does not go into silver.